Everybody, it is Friday, the 21st of January, 2022. This is Brian Shannon from Alpha Trends, and we had an ugly week in the market here, adding to further losses for the year. S&P down close to 8%, NASDAQ about 12%, the Biotechs down 16%. Just an ugly tape, and this is why I'm a trader. I don't have the stomach for this stuff. Here's the weekly chart of the S&P 500. We've clearly broken that pattern of higher highs and higher lows, and now we need to be much more cautious on the bigger picture. What we would be looking for if we're going to see a true reversal is that if we see a lower high and then another lower low, then we're officially in a downtrend on the weekly time frame. Daily time frame is clearly broken. We've drawn all these volume weighted average price levels in, and they've just continued to slice right through them. I had pointed out this week the measured move price target, which it sliced through as well. And this is why I'm always so cautious about trying to pick a low and instead say these are potential levels of support. Support is only known after the fact. And what we do is we look at these levels and we say, okay, it's at this volume weighted average price where it found support previously. Then we drill down to a shorter term time frame. That was Tuesday. And we say, where were we on Tuesday? Was there any evidence at all that the buyers took control? The answer is no, because we were below the declining 5-day moving average. This is multiple time frame analysis. We look to the bigger picture to say, here's a potential level of interest where maybe there's enough demand to halt the selling, to absorb the selling, and find support. So we look at the shorter term time frame. We're below a declining 5-day moving average. We don't trust these little rally attempts and say it's guilty till proven innocent. We closed right at the lows for the day, for the week, for the month, for the year. So just, again, an ugly start to the year. It doesn't have to be the way your year goes, though. At this point, it's probably too late to be looking to sell your positions based on, this pullback. Instead, if we see a rally, let's say back up towards this level, and then we start to find resistance, well, then you would want to sell on this move right here as it turns back down. Don't sell short on strength. Sell short strength after a rally has failed. Look at the volume. The biggest volume tends to come at turning points. The problem is, yesterday we had bigger volume than the day before. Today we have bigger volume than yesterday. And Monday, who knows? Maybe we're going to have volume that exceeds this as well. So volume expands in the direction of the trend, as we saw right here on this downward move. It peaks at the near-term turning point and then diminishes on the rallies. Expands in the direction of the trend, diminishes on this rally, and then starts to expand again on the downward movement, peaking at the near-term turning point, and we don't know where that turning point is. So instead, we look at the intraday action and say it's still guilty till proven innocent. If you follow me on Twitter this morning, I had posted what I had shown for Alpha Trend subscribers, saying that right here, if we can get back up above this little area, we're holding above the volume weighted average price for the day and from the low at that point, that maybe we could head up towards the 2-day volume weighted average price. And a stop, let's look at the 2-minute time frame actually. The stop was going to be right under here. Well, we saw a little pattern of higher highs and higher lows develop off of there on the very short-term time frame. That pattern was broken here. That's where you should have been out, or at worst, right here. That's if you're trying to look for a turning point. Now, again, there was no evidence on the bigger time frame, so why try a trade like this? This is called scalping. It's when you're in the market, you don't have a short position, and you're looking for a potential turn point. This is how you do it. You don't just buy it and then hold on to it and say, I'm making a stand, I think this is the low. You get involved with a reason, and if it had continued up, selling some at this second day volume weighted average price would have made sense. And if it did this and we saw a big rally, well, then maybe I would be holding some over the weekend. Instead, I'm in cash. And that's the way that we want to look for potential turning points. People always ask, where do you anchor from? Well, I always anchor from the beginning of the day, of course, and we're looking at a very short-term time frame. I anchor from the low of the day, and then I anchor from the peak of the day. What's the value of these? The value of these is when we get back above that volume weighted average price for the day, you can see it pulled back, tested it, found support, and it found buyers at the volume weighted average price from the low of the morning as well. Well, here's more evidence that sellers were gaining control because it broke below the volume weighted average price from the lowest point, then below the from the day. So really, it should have been break even at worst. Then later on, as we saw it bounce, where did it bounce to? The volume weighted average price for the day, which was also the VWAP from the peak, and then from the peak again. And then these volume weighted average price levels that were declining told us throughout the session sellers are accelerating their activities, and this is not a time to be a buyer when it's below those volume weighted average price levels. I'm outlining this on a 2-minute chart because that's the information in front of us today, and that's how we use it on every single time frame. Nasdaq got obliterated down through the volume weighted average price from the March low, down through the volume weighted average price from last year, down below the 200-day moving average. Support is only known after the fact. We look at these levels such as the 200-day moving average, and we don't just blindly stick bids in at 360, what is this, 365, 366. Had you done that yesterday at 366, this is where you bought, right into the waterfall. And it continued to bleed out here today. We were getting a little bit of a bounce, but then the sellers regained control and maintained control throughout the session. It is ugly, and one potential scenario, maybe we undercut this slightly and then bounce. I think that next week you've got to be very careful. If you're going to be a buyer, look at it as, what if it does something like this? What would that, and then, shorting up in here, what would that pattern look like? Shoulder, head, shoulder? Maybe. The Russell 2000 obliterated. This market, we broke that bigger band of support. This failed move led to a fast move lower and then continuing down. So far today, we stopped at this volume weighted average price, which we've been talking about for the last month. Next below that, potentially we come down to the volume weighted average price from the 2020 low. That's at 186. It's reasonable. We're in a downtrend. The sellers are in control. It's below a declining 5-day moving average. Look at how, again, 2 weeks ago, the year-to-date volume weighted average price was the exact high that day, and sellers have accelerated their momentum campaign to the downside with that declining 5-day moving average. Semiconductors got hurt as well. These guys have been the clear leaders. Well, now they're broken. They've broken below this bigger band of range that we've been talking about. Here's that support, here's that resistance. Here we see it on the daily time frame. It broke support and continued to fail. The 200-day moving average is coming up next. Maybe there's buyers there, but you don't want to buy it unless you have short-term evidence on the very shortest time frames. And when you get that shortest time frame entry, it doesn't mean just buy it and hope. It means manage it from there. See if the market allows you to continue to hold some, or if it just takes it back away like it did today. The Biotechs, we've been talking about this bigger band of support that was broken. It was tested, and this is exactly what we want to see. If you're bearish, this is what you want to see in the Nasdaq and the other markets. Is once that support's broken, it rallies back up to it and then continues lower. Just textbook support broken becomes resistance here below a declining 20 and 50-day moving average, below the declining 200-day moving average. You know the names, they're all getting smashed. Coin, buy the dip, no thanks. Roku, buy the dip, no thanks. Peloton, no thank you. How about PayPal? That's a good company, right? Who cares if it's a good company? It's a horrible stock. How about Snap? Just over and over again. You know the names. I don't have to go through them. I've been talking about this forever. Don't buy the dips. Buy strength after the dips. Financials, we spoke about last week that the run-up ahead of earnings was likely to be a buy the rumor, sell the news, and that's exactly what it did occur. And so far, we've seen zero evidence that buyers are stepping back in. As it broke down over here last Friday, go back and look. I said you don't want to be a buyer because it's below a declining 5-day moving average. Forget about the earnings reports and what the CEOs say. Sellers are in control. Now, it didn't mean I expected it to come down here. I was thinking, hey, maybe it comes down to the volume weighted average price from this low and starts to stabilize at 39.80. Was there any evidence of stabilization at 39.80? No, there was not. Still below the declining 5-day moving average. Don't be a sucker. Don't fall for what they try to sell you. XLE, this is what I've been talking about, and it did it perfect. Wednesday I did a video saying, if it breaks this level right here, it's most likely going to come down and test the volume weighted average price for the year. That's exactly where we are. It doesn't mean it's a buy. We're below a declining 5-day moving average. It's guilty till proven innocent. Let these things settle down and shake out, and maybe they give us a low risk entry point next week, or maybe they just continue to bleed off. Right now, defense is the name of the game.